50 higher on the Nifty, almost approaching 0.5%.
We're just about hovering very close to those levels, all-time highs for the Nifty and the Sensex.
11,530. But it's essentially finding some resistance at those levels.
It's been a day where the markets had big volatility.
Well, on the mid-cap screen, you've got green for what it's worth. So there's some outperformance by mid-caps today.
A late sell-off wipes out all gains on Dalal Street. Nifty slips over 100 from the day's high to end with minor losses. Sensex clings on just above the 38,000 mark.
The Nifty Bank ends off highs but manages to post a record close. The index closed above 30,000 for the first time ever, led by Yes Bank and IndusInd Bank. The Nifty PSU index also rallies. SBI, OBC, Union Bank were some of the top performers.
Top listed companies like Dabur and M&M raised the red flag on rural demand. Both companies warn about a potential slowdown in revenue.
CNBC-TV18 News Break confirmed Tata Group forays into the airport business. A consortium of Tatas, GIC and SSG Capital Management invests 8,000 crore rupees in GMR's airports arm. The proceeds will be used to cut GMR Infra's debt.
Stocks in focus. Jet continues its rally as the airline plans to reinstate 50 flights from the 31st of March. ICICI Pru jumps after a Prudential Corp's offer for sale is oversubscribed on the non-retail side. Reliance Nippon also gains on news that Reliance Capital may sell its entire stake in its asset management company to Nippon Life. Well, those were the top 5 headlines from Dalal Street on a day when the markets yo-yoed a goodish bit and we were left in suspense over what the Prime Minister might announce. Hello and welcome to Markets Today Talk Back, the show where we tell you everything that happened in those 6 exciting hours of trading in 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi, Prashant.
Hi, Lata. High volatility day. But by close, there were cuts. The banks did well. The broader market, could have been better and was better at one point. But, the volatility took its toll. Over the next 30 minutes, we will talk about what mattered. We'll tell you the stories. And, of course, we'll take your questions. And to help us answer your questions, we have our guests, Gaurang Shah and technical expert Ashwini Gujral. Gaurang and Ashwini, thank you very much for joining us here on the show. Let's quickly take a look at the market itself. What really happened? There was that a huge amount of anticipation midday about that announcement. Can we divide the market into 2 halves? All of that, Lata. Let's start right at the beginning.
Well, actually, you have to give it to the Prime Minister. I guess he doesn't know that a statement from the Prime Minister can keep the markets on the edge. So it was 1 hour of an intermission when we were all biting our nails. Tantalizing that 45 minutes, I think. Okay, but, the backdrop really was not too risk-on, not very much in favour of equities. Asia was mixed. Shanghai did well. Europe, again, continued to bleed a bit. And bond yields are still falling. The 10-year in the US at 2.37. It's come a long way off, even in the last 3 days since the yield inversion, as it were. So all these are slowdown signs. Dalal Street, of course, has been striking a different note altogether. It started with gusto because yesterday it finished at the highest point. So clearly there was unfinished business for the bulls. There were deals waiting to be done on the positive side. So, we saw that flourish up. But after that, distinctly, we saw profit taking. To some extent, the market maintained the momentum even after the Prime Minister's announcement was a bit of a no-show because people were expecting something very dramatic. An announcement with respect to scientific advancement was perhaps not enough to keep the Dalal Street bulls going. So we did see some profit taking towards end of day. I think markets are going to see, as you approach 11,550, which has been the top, and the next top, of course, is 11,760. I think around that, the market will want perhaps more certainty from polls or more certainty from results. Politics or economics should give us a new high. Otherwise, I guess that 11,550 resistance will continue to kick in. Let's see. What have you made of the individual performances?
Banks, Lata. It was almost similar to yesterday in the sense that banks participated, but the exception was Reliance, which was up sharply yesterday and contributed to a large part of the gains yesterday, but Reliance was missing in action. Actually, it ended lower. It was a big sell-off, actually, from the highs of the day on RIL. But I'll get to that in just a bit. So PSU banks and private bank index, top 2 gainers out there as far as sectors are concerned. And then you had the small cap index also, which I think requires a mention, 1.25% higher, and that kept the overall market breadth not too bad. Declines were higher than advances, but by only a small number. Sectors under pressure: energy, largely thanks to OMCs and Reliance. Pharmaceuticals as a sector was, as a pack, was down, and of course autos. The troubles and pain continues. Big Nifty gainers. That's just to finish off the large stocks there. Banks, I mean, Yes Bank, IndusInd Bank, financials like Indiabulls, Housing, all of them came off the highs by close along with the market, but still good going. SBI and the PSU pack was higher. JSW Steel and Z Entertainment were some of the other non-bank, non-financial gainers. Losses in the Nifty, you had, as I said, RIL, which put pressure, Eicher, and a lot of auto names after that. Eicher, M&M, Tata Motors, Hero, Maruti, across the board there was a pressure on auto names. Okay, now come to broader markets, and I'm starting with losers first. Jubilant Industries was down sharply, large volumes. Dabur was down. We spoke with the management, and we'll come to that in a bit. Idea was lower. DLF, which had this uninterrupted rally all the way to 200, gave back some. HPCL and NTPC were some of the other losses in the broader space. In terms of broader market gainers, I mean, actually, what was up a lot more. If you look at the losers and what lost with volumes, the price damage wasn't all that great. But what went up with some velocity. ICICI approved big gains. Shriram Transport, again, a lot of financials. Cholamandalam Finance, GIC Housing, JM Financial, AU Small Finance Bank, Oriental Bank of Commerce, and then some of the non-financials. MGL, there was Avanti Feed, again, very large volumes. Godrej Properties was strong. Inox was up some 8%. SML Isuzu, of course, was one of the top gainers, some 16% higher by close. So, I mean, plenty happening as far as stocks go. Lata.
Okay. No, you're absolutely right. In the morning, it looked like, crude is higher, so will financials do the next move, or will it be IT? But financials answered emphatically, positively. Okay, let's get straight away to our guests. Ashwini Gujral. First to you, Ashwini. What have you made of the volatility that we saw in the markets today? Where do we go from here?
See, basically, both on Nifty and Bank Nifty, the market is turned sideways. The range approximately is 11,340 to about 11,550 thereabouts. So we could spend some time in this range and meanwhile have the sort of intraday volatility that you saw. But now the point is that you should be trading the ranges instead of trying to mess around in between the range.
Then, Ashwini, suppose you get a flattish kind of open tomorrow. Should one do anything at all or nothing?
Nothing. You should do something only if one of the boundaries are hit.
Well, the second story, banks. So Nifty Bank ended off the highs, but it managed to post a record close. The index closed about 30,000 for the first time ever. Led by private banks. Yes, and IndusInd Bank led from the front. The PSU names, as I mentioned earlier, also did very well. They outperformed benchmark indices. The index was up 2%. SBI, Oriental Bank of Commerce, Union Bank were some of the top performers in trade today. We've got a question coming in. Vijesh Roni from Goa has written in with a question on SBI. He's been holding 150 shares of the company. His cost is 323 rupees a piece. He wants to know if he should hold or sell. Gaurang, what would you tell Vijesh, SBI?
Thank you, Prashant, and good evening to all of you all. So, I think a lot has changed at ground level on the fundamentals as far as banks are concerned, especially likes of public sector bank like State Bank of India, which of course features in our coverage. I think the most recent development in form of resolution for Jet Airways has thrown in more positivity. And along with that, you have resolutions under the IBC NCLT throwing in positive tailwinds. Well, he got in at a little bit elevated level. He had opportunities sub 300 to average in case if he had investable amount. But nevertheless, I think you will get plenty more opportunities. So stay invested, and if you have investable fund, I think 280, sub 280 levels on SBI would be a comfort zone in case if he wants to average more.
Oh, okay. Yeah, actually, it's not a long way in terms of profit. 323 is his buying price, so he may even get there shortly. Well, with that, let's get to the third headline. Slowdown concerns continue to plague the market. Consumer durables, actually non-durables like Dabur and consumer durable making companies like Mahindra & Mahindra and Eicher all ended in the red. In fact, in an exclusive interview to CNBC-TV18, both the companies, M&M and Dabur, raised the red flag on rural demand, warning about a potential slowdown in revenues.
Well, there is a slackening of demand, there's no doubt about that, and that's both in rural and urban. It's a consequence, obviously, of tight liquidity, agrarian distress, and joblessness. In some cases, for companies like ours, the prolonged winters in the North India, which was extraordinarily, it's still pretty chilly in Delhi and North, meant that the summer products, which normally have a great month in the month of March and starting February and into March, are now not showing some fatigue.
So we've come out of 3 years of good growth, 22%, 18% kind of numbers, and the current year is going to be close to between 9% around 9 to 10%. We would expect F20 to be a single-digit year growth. We still haven't put a number on what we would expect that to be, but we certainly don't expect double-digit next year. So we'll wait and watch, and maybe by April we'll put out a number for next year, but we expect it to be single-digit.
Not all the great commentary coming in from two of the top companies in the respective sectors. We got a question. Ali Asgar from Hyderabad has written in with a question on Dabur. He's been holding 60 shares of Dabur, been holding them for the past 5 months. He wants to know if he should hold or sell. I think his cost is 425 rupees a share. Ashwini, Dabur, it's at about 409 today. What would you tell him?
See, there is a bit of a slowdown in FMCG, but these things, they keep happening. Now that you are getting declines because of the slowdown, the idea should be to accumulate till say around 330, 350. Because when it picks up, generally FMCG stocks give you 10 to 15% CAGR. So very important to buy when things are slow, so that you are able to make money on the upside.
Yes, that point is taken, of course. Ashwini, do stay on. We have to take a break. Gaurang as well. But before we take that break, let's also play out some very important market opinion we got from Timothy Moore of Goldman Sachs. He's the head strategist for emerging markets there and very bullish on India. Listen in, we're back in a jiffy.
Against the backdrop of the weakest reporting season for the fourth quarter for the region as a whole, we actually saw India coming in quite strongly relative to starting consensus expectations. So there's a sign that earnings growth is actually beginning to stabilize, and the absolute number is actually quite good. We're looking for about 16% growth in calendar year 2019. It's a little bit less than consensus. Consensus is currently about 21%, but that 16% is the best in the region. So you put all that stuff together, and then you add in the potential for an improvement in sentiment into the election, and it says to us that the risk-reward actually looks pretty decent over here. Our view is very clearly we want to be with what we call the value cyclicals. This would be more banks and autos and some of those sort of deeper cyclicals, which we think will benefit from a recovery in economic growth. And we'd be fading some of the exporters as well as what we call the expensive defensives. A lot of those defensive stocks have delivered very strong returns, but at the sort of valuations we're seeing, which for some of the consumer stocks are as high as 40 to 50 times earnings, we think a lot of that good news is already reflected in the share price. There's a pretty strong pattern of strong absolute and relative performance by the Indian market in the 3 months and 1 month leading up to actual election date. And even some continued strong performance after that, some of which then tends to revert, say 3 months or 4 months after the election. But certainly in the period of leading up to the election, there tends to be some strong performance. You can ascribe various factors to that. Maybe it's strong fiscal policy, some so-called pump priming before the election, etc. Maybe it's the idea that in past elections, there's been some uncertainty in terms of the ruling coalition, and therefore if there's a potential for greater certainty post the election, maybe that's something the market factors in.
Back, we've had an interesting trading session. Gaurang Shah and technical expert Ashwini Gujral are with us to decode the day's action. And of course, they're taking your questions. We got through 3 of the top stories. So let's move on to the 4th headline of the day. CNBC-TV18 News Break confirmed. The Tata Group has made a strategic investment in GMR Infrastructure's airports business. Tata is tied up with GIC and SSG Capital to buy a 45% stake in GMR's airport business for 8,000 crore rupees. The proceeds will be used by GMR to cut its debt. We earlier spoke with Sushil Modi, Group Chief Financial Officer at GMR, who said that the consolidated debt should go down by a full 8,000 crores and that corporate debt will be nil after this particular deal. Listen in.
Our debt as on December, our quarterly announced results, the debt number was ballpark 20,000 crore. Effectively, the debt goes down by the entire 8,000 crore because the primary proceeds that comes into the GMR Airport Limited, that also will be utilized to repay some of the debt that was sitting at the GMR Airport Limited. So net, the 7,000 of secondary proceeds as well as the 1,000 crore of primary proceeds, both combined 8,000 crore reduces the leverage or the debt. If you just do a pro forma without going into the specific numbers, it takes out 1,000 odd crore, 1,000 plus odd crores from the finance charges. So the consolidated financials, the finance charges is going to kind of, reduce more than half.
Okay, so it'll be used to retire a bit of debt, though I don't know, how much of the other units' debt is going to be lowered. Avinash Patra has tweeted to us with a query on GMR Infra. He has been holding 1,000 shares of the company at 22 rupees a share. Oh, he's waited a long time. Wants to know if he should hold or sell. Gaurang?
Lata, no specific coverage, so I will refrain from making any buy, sell or hold statement. But let me say this. Whatever the company has done, I don't know how significantly it will improve the earnings side. And over there, I think over the last many quarters and years, there have been absolute disappointment. Secondly, it is a highly overrun stock. Any rallies would be met with selling pressure. So one needs to be a little bit cautious.
Okay. Fair point. With that, we come to the last headline from today's market action. Stocks in the news. Jet continued to rally as the airline limps back to normalcy. The stock gained 4% after the company said that it will reinstate 50 flights from the 31st of March. Jet also plans to operate 75 planes by the last week of April.
CNBC-TV18 was the first one to tell you that Reliance Capital...
I think, Abhishek, you have to wait a bit. We have yet to read that headline. ICICI Prudential, that's what Abhishek was talking about, zoomed 9% after Prudential Corporation's offer for sale got oversubscribed on the non-retail side. Meanwhile, Reliance Nippon AMC gained more than 4%. The stock rose on that news that Reliance Capital could exit the asset management company. Then, Abhishek, now you may continue all the details.
CNBC-TV18 was the first one to tell you that Reliance Capital is on its way of monetizing its stake in Reliance Mutual Fund. So the final formalities are underway and the deal could take place as soon as by Friday. So Nippon team is in the office of Reliance Group and the entire stake in the mutual fund business of about 42.9% could be sold at rupees 240 per share. The present top management of the mutual fund business will be retained back. So Reliance Capital has about 42.9%, which if sold at 240 per share could fetch them around rupees 6,300 crores in terms of cash inflow. Reliance Capital has not responded to our query. In another move, ICICI Pru was strong in trade today due to the oversubscription that it has received on its offer for sale from one of the promoters, that is Prudential Corporation. So yesterday the offer was made to the institutional investors, which was oversubscribed by 4x. Today the offer for sale is on for the retail investors. A total of about 5.3 crore shares or 3.7% stake by Prudential Corporation Corporation is on offer for the investors. Remember that post this stake sale, the promoter holding could fall below 75% and it would be around 74.98%, complying in line with the SEBI rules. Brokerages are, positive on the stock. Goldman Sachs has a buy rating with a target price of rupees 421. Deutsche Bank also has a buy rating with a target price of rupees 440 per share. Back to you.
Abhishek, thanks very much for that, and sorry about that, back and forth on air, but appreciate you getting us all the details. We've got a question coming in. Somnath Bhattacharya has written in with a question from Kolkata. He's got 1,000 shares of ICICI Pru. His cost is 351 rupees, which is pretty close to where the stock closed at 347 today. He's been holding them for the last 6 months. He wants to know whether he should hold or sell. Ashwini, ICICI Pru, would you consider what happened today a breakout? Should he hold on? What would you say?
See, my sense is that after a long time, the stock is bottoming out, and today it's closed above its 200-day moving average. So I wouldn't be surprised if you get to see, say, about 465, 470.
Oh, wow. Okay. Gaurang, your thoughts both actually on Reliance Nippon as well as on ICICI, ICICI Pru. Any views on either of these stocks? Would you buy it? They're all in the news today.
So yes, Lata, we did have a subscribe note on ICICI Pru during the IPO, and post that we have a fundamental coverage, and I think there is a lot of potential for life insurance related companies likes of ICICI Pru, HDFC Life, SBI Life, and a huge market in terms of untapped market which needs to be penetrated. So we definitely like ICICI Pru. If I'm not mistaken, and if my memory serves me right, I think targets are close to about 435 to 445.
All right. We'll leave it at that. Gaurang and Ashwini, thank you very much for joining us and answering questions from our viewers.
Well, it's a wrap with that here on this edition of Markets Today Talkback. From Lata, me, everyone on the team, thank you very much for staying with us. More coming up on the other side.